Insolvency and Administration, chapter 18. Chapter 18, right? Okay. What is insolvency means and what is insolvency administration? When a company is not making enough working capital or profit to sustain in the market, right? That company is unable to pay its debts because company is not operating at a sustainable manner, going concern problem. In this case, we can't keep this corporate as it is. A director, when they feel the company is operating and it's making losses and we are unable to pay our debts, company should stop their trading. Further, if you do trading, it is known as over trading. When a company unable to make payments for the debts, right? And you clearly identified, okay, company is going concern is question mark. After that also, if you are continuing the business, that is we call wrongful trading. So what is the correct method is we should declare liquidation. Liquidation I will discuss in a while. We should declare that we bankrupted. After that, insolvency administration proceedings will be done. Insolvency means company is not generating enough cash flows, not enough profits to make its debts. And how to administer? Let's say the company is not in a position to pay its debts. So whatever the amount available at the company, whatever the net assets belongs to the company, that should be administered properly. For that, we appoint an external consultant called liquidator. Most of the time, solicitors. This person will come to the company and this person will take the worth of the company. That is, I can say net assets of the company, net worth of the company. From that particular asset base, they prioritize to whom we should settle first. Normally, ordinary shareholders will get the last residual interest. Is this clear? So, subheading write down insolvency. Subheading write down insolvency. Insolvency proceedings commence when an entity unable to pay its debts. Due to going concern problems, write down working capital issues. Going concern or working capital, okay. Second subheading write down administration. What is administration means? Actually, students, if you look at the term called administration, right, we should see the possibilities of two things, right? Whether it is possible to make entity solvent. Whether it is possible to make entity solvent. Company is insolvent. Company is unable to make pay debts. So administration, through what we are trying to do is, okay, whether we can improve their financial performance at any circumstances. If it is not possible, then how to winding up? How to withdraw from the market? For this winding up, we should appoint what? A person called liquidator. Is it clear? So if it is possible, we try to improve the performance of the company. If it is not possible, we go for winding up. This is what called administration. Is it clear? So under that write down. The term administration include to assess ability to make company solvent, ability to make company solvent, or winding up. When entity decided to wind up, need to improve the value in winding up. Need to improve the value in winding up. Next point. Administration and winding up procedures. Administration and winding up procedures are carried out by qualified insolvency practitioners. Qualified insolvency practitioners. Qualified insolvency practitioners. They should be a member of professional body. Example, ACCA, Law Society, CA. It can be ACCA, it can be Law Society or CA. That's why I told most of the time these people we call solicitors. Lawyers also appointed as liquidator. Is that clear? Understood? Right. Now heading right down, liquidation. Mark it as important. Now heading right on, liquidation. That is we call winding up. Under that write down, liquidation is a dissolution or winding up of a company. Liquidation is a dissolution or winding up of a company. This decision is taken by number one, the directors. Number two, the creditors. Sometimes what happened was you keep on telling reasons without making the payment for your creditors. So creditors will wait for a certain time. After that, they will start to react. So they can put a claim in the courts that company is not paying debts. So that will also create a winding up procedure, right? Third one, the members. That is we call shareholders. These three parties have right to decide winding up. These three parties have rights to decide winding up. Next point, write down. Directors generally decide winding up. Generally decide winding up if the company unable to perform at required level. Company unable to perform at required level. Creditors has sufficient ground. Next point. Creditors have sufficient ground through court to request winding up. Winding up. So as I said, creditors also can able to make it winding up, but through the courts. Members might decide to winding up the business. Members may decide to winding up the business after directors' consultation. Right? This is a voluntary winding up. Okay. Next subheading, write down liquidator. Liquidator. Liquidator must be an authorized and qualified insolvency practitioner. Okay, right. See, insolvency proceedings are started means, liquidation proceedings started means there are certain restrictions for the company. Right? Let's see that. Okay, so subheading right now. Common features of liquidation. Common features of liquidation. Under that, write down. Once insolvency proceedings are commenced, comma, number one, share trading must be ceased. Share share trading must be ceased. Number 2, changes in members are not allowed. Number 3, members is not allowed. All documents should mention that company is in liquidation process. Number 5, director's power. Number 4, okay. Director's power to manage the business ceased. So once the insolvency proceeding started, we can't do share trading. Members you cannot change, and also all the documents we should mention that we are in the winding up, and directors' power is loose. Normally, I told you executive directors and non-executive directors. CEO is the leader of executive directors. So executive directors take run by the business, right? So the decisions to operations are taken by them. All their powers get seized once insolvency practices start. So who got all this power? Liquidator. Is that clear?